Welcome, dear traders. The third quarter of 2023 is over and the crypto market completed it with a dismal results. For example, the trading volume of digital assets on centralized exchanges shrank by 26%. Let's discuss what driving forces influenced popular crypto assets on the week from September 28 to October 4. Despite cutting-edge opportunities offered by digital money, it has not become a mainstream payment means yet. Still, there is a progress in its wide recognition. Lately, leading Japanese car manufacturer Honda Motor announced a surprise decision to greenlight cryptocurrencies as a payment means for its vehicles. From now on, customers will be able to pay for purchased cars, motorbikes and other products not only by Bitcoin, Ethereum and Ripple, but also by more exotic tokens, for instance, the meme Pepe coin. Nevertheless, fiat money remains the most widely accepted option around the world. For this reason, market quotes of cryptocurrencies largely depend on the US dollar. In turn, the dollar depends on the US economy and the fund's interest rate of the Federal Reserve. There have been several catalysts for the greenback's growth in the last 7 days. In essence, at present, incoming macroeconomic data determines the prospects of further rate hikes by the central bank. The flood of reports released this week was mainly in favor of a further aggressive monetary tightening. As a result, the US dollar jumped to the levels not seen since the fourth quarter of 2022. Its index briefly touched 107.20 on Wednesday, October 4. The greenback owes its strength to rising yields of US Treasuries. Due to the strong likelihood that the US Fed could raise interest rates again, either in November or December, the US bond market collapsed. Its volume is estimated at a whopping $25 trillion, thus making an impact on government bonds around the world. As a result of selling, Treasury yields spiked to multi-year highs. For example, the benchmark 10-year Treasuries leapt by 20 basis points instantly to 4.9%. While the crash in the US Treasury market was sending shock waves across the global financial markets, the crypto industry was also suffering losses. For example, on October 4 alone, the total amount of all altcoins sold was almost $73 million. No wonder crypto fans detected bad omens in the crypto markets in the early fourth quarter. Investors are braced for more challenges. Indeed, higher interest rates of the US Central Bank are a nice catalyst for the US Treasuries, but they could put pressure on risky assets, in particular cryptocurrencies. Will Bitcoin follow the grim scenario of US stocks in the fourth quarter? What are the odds of the long-awaited rally in anticipation of the halving event, when the number of tokens will be cut twice? According to the BTC.com website, the gauge of the Bitcoin mining difficulty set a new record on October 3, having climbed to 57.32. The next estimate will be provided on October 16. The reading is expected to increase. Interestingly, in the last 12 years of surveys, Bitcoin closed the second autumn month in the green in 8 cases. However, the fundamental background was totally different at that time, without the first in history ouster of the Senate Speaker, a threat of the government shutdown, and such elevated interest rates set by global central banks. Nevertheless, all top 10 tokens looked a positive dynamic last week. The flagship crypto tested the high of $28,560 on Monday, October 2. The lowest price for the last 7 days was recorded in late September at $26,250. All in all, despite unfavorable fundamentals, the number one crypto looked a weekly increase of 5.5%. On top of that, Bitcoin surged by nearly 10% from September 27 until October 2. However, its sudden reversal caught the pulse of guard and erased half of this growth. On the whole, Bitcoin stayed afloat in the last few weeks, but the trading volume of the main cryptocurrency slumped to a one-year low on the back of a macroeconomic and political news. Bitcoin might get trapped sideways or even might come under selling pressure. The lingering standoff between the crypto industry and the watchdogs has not vanished. In the United States, crypto firms now find more frequently. The notorious Securities and Exchange Commission, alongside 5 financial regulators in the United States, warned about risk of investing its cryptocurrencies. The communique reads that crypto assets could be extremely volatile and could be exploited for market speculations. Crypto platforms may operate without a license. That's why investors cannot rely on the recovery of their funds in case they lose money. Besides ARK, 21 shares application to launch a spot Bitcoin exchange traded fund has been delayed again. The new deadline is January 10, 2024. Also, at the end of last week, the Commission postponed consideration of similar applications from BlackRock, Bitwise, and Invesco. And this decision is made due to fears of a US government shutdown. The new shutdown deadline is set for November 17. The second largest crypto in terms of market value showed more modest gains than Bitcoin in the last 7 days. Ethereum opened a week ago below 1,600 when the price easily passed this round level and rose to $1,737 on October 2. However, Ethereum had to pull back to 1,640 amid the pressure of US Treasuries. The thing is that the market capitalization of stakes in Ethereum has gained 3.6% over the past few days. The coefficient already stands at 22%. In other words, the number of Ethereum owners who earn money from staking will decrease. Staking rewards are, of course, a good investment option. But for now, US Treasuries are even better because they bring the highest yields. For comparison, currently the reward rate of the Ethereum network is 3.76%. But the yield on 10-year Treasuries, as we already said, rose to 4.81% on Tuesday. In addition, government bonds carry low risks, while Ethereum is prone to high volatility. The native token of Ripple Labs could be one of the most vivid examples of a sudden twist in quotes in the crypto market. After hibernation for a month, Ripple again shot up to trade at $0.55. After the spike, Ripple holders rushed to book profits and enabled a downward retracement. Optimism of Ripple fans was driven by 2 good pieces of news on the one day. First, the monetary authorities of Singapore issued a full license to the company, which gives the right to provide payment services related to digital tokens. In a statement, US-based Ripple Labs said more than 90% of its business is outside the country, and the company will continue to give priority to the Asia-Pacific region for the introduction of its cryptocurrency-backed products. Second, the court rejected the Securities and Exchange Commission's request to file an interlocutory appeal in the case against Ripple. In this context, the price of Ripple made a sharp jump twice in a week and surged by 5.6%. At the end of the 7-day period, as the hype around the token was over, Ripple had already entered consolidation along 53 cents. The confident leader among the top 10 cryptocurrencies was Solana again. The token has appreciated by 20% for the last week. The asset is showing remarkable resilience, and the price was going steadily up from the support at 19.1 to the resistance at $23.30. Amazingly, the token managed to trade steadily in the highly volatile market. The fact that Solana does not lose in value could be explained by its role as an alternative to Ethereum. Lower commissions for transactions and a shorter processing time inside the Solana blockchain gives the token more luster compared to Ethereum. To sum up, trading currencies, you should be ready for surprises. The bottom line is to keep close tabs on events and news to respond to them promptly. Our regular review is over. It was presented by me, Kate Stichina. Welcome to leave your comments and ask any questions. So, see you online soon.